Here's the chart of spot gold on a 2-hour scale, and the main assumption I'm working with is that we are in fact in a corrective ABC movement, corrective to the first surge that we have seen here. And here are the subdivisions. That's a 1 2 1 2 3 4 3 4 5 completed here. That is an hypothetical first wave. Okay, a hypothetical first wave. This is a very bullish wave count. We will see the alternative in the case of silver, but right now this is treated as an A. Here we had an ABC with a surge, and that is taken as a C, of which we have seen already a 1 2, that's a 3, that's a 4. We just need a notch down here, just a drop. I doubt it should really go under 1245, okay, because we had an extended first right here. Just a dip, and then the very interesting moment will be with us to see if it's going to come back. If it comes back, and let's say it comes back to 1264, 1265, then and it gathers very strong momentum, that will begin to look like the real thing, perhaps followed by something like that. So we will have the 1 2 behind us. Okay, you can see that 1255 marks the 50% retracement. 1245 will mark the 0.618, and there is quite a bit of support here. So ideally we want to see it knocking the floor at 1245, reversing and shooting higher towards 1296. That will start an absolutely explosive move in gold. Now that doesn't happen. This optimistic scenario, let's say, doesn't really come to pass. It breaks down towards 1245 and it gets stuck there. It just doesn't move. It doesn't move for about a week. That's a bad sign. That's a very bad sign. That's a sign that it's basically correcting, and it's turning my AB into a 1 2. That'll turn it to a 1 2. That'll be your third wave. That'll be your fourth wave, and then you have to look down because it's coming down as the fifth leg. Okay, so here you go. That's the sign. It drops a bit. It comes back. It sort of comes back to life. Yes. So suddenly it gives you 1 or 2 days like that, okay, or 1 day like that, then I think it would be sufficient. The important thing, if it goes down, it comes back, to see it jumping very, very short term. Yeah, if you are very focused on gold, to see jumping back about 1255.6, which is right here. That would tell you that this is unlikely to be a 1 2 and that being a 3, because it's heading higher. So it's cancelling the 1 2 3 option. It stays with an ABC as the most likely. Now I'm going to go to the, let's go to the 30 minutes. So you can see the various legs. That's our A. That's a 1 2 3 4 5. That's an A. That's a B. That's a short C. And sharp retracement. That's 1. That's 2. And as I said, this is most likely an extended first. That's your third wave. That's your fourth wave. And down it goes for the fifth. Okay, and since we had an extended first, the fifth shouldn't be longer than the third. Okay, the third was nevertheless quite a move. That's 52.66. That's about $15. Okay, so if you drop $15 from 12.54, that takes you to 12.40. Okay, 12.40, 12.42, more or less, should be the end of that fifth leg. And then, as I said, we're expecting the rebound. I'm going to show you the daily. Let's see if it gives us enough perspective. You see, the daily is showing us the following very, very bullish scenario. And I have to emphasize, it's not high confidence, but it will become high confidence if we get the move I've just discussed. In case you can't find your way around here, I'll repeat. That will be an A, that will be a B, or that will be 1, that will be 2. Okay, that's 1, that's 2, or that's an AB, most likely 1, 2. And that is our 1. Okay, that's the one that we now find the market correcting, meaning correcting this surge. Okay, so if we come back and we jump about 12.95 right here, that, in my opinion, would be very, very bullish. Very, very bullish. At the very least, we're almost certainly going to knock 1380. We're going to run toward 1380. But it seems to me, if it does manage to close above 1300 in style, and what I mean in style, I mean something like that. Yeah, in a series of sharp daily advances, then don't expect 1300 to be the end. It's going to fly towards 1380 and potentially a lot higher than that. So that's the very optimistic scenario. Now this is silver, where I'm showing you also the optimistic scenario, but silver undoubtedly is weaker short term, because silver here on the 60 minutes is showing you that the advance that began from here, which in the case of gold reached and exceeded the previous high, correspondingly speaking, here it is falling short of that. You see, there is quite a lot of gap here that silver was not able to close, and moreover, silver is breaking down in a menacing way that could reach the floor at 16. If that happens, of course, forget about this being 1-2. It's out of question. The more somber view for the longs would be that in fact this is a 1-2. In fact, that's going to go down in the third wave. Yeah, it's going to break under 16. Okay, and all of this should be taken A as an A, that's a B with an ABC terminating like that, and that'll be a C down inside that very big triangle I'm going to show you in a sec. But let's just focus one more time about the on the optimistic scenario. Suppose we run up here and we have 1, which is possible. You take this as 1-2. You have a 3, you have an A, B, C, D, E. That's your fourth wave, and that's your fifth. Fine. You come down, you have an A, you have a B, and that is your C. So silver doesn't have a lot of room to run here on the downside. I would say extreme limit. Let me just take this, would look better right here. You see, I would say stopping at 1640 would look weak, but could just about hold the bullish wave count. This is really the extreme limit. It mustn't really reach there. But reaching towards 1640, finishing the C coming down, and then reversing, running back above 17. Okay, running above 17, that would look like a beginning of a run back towards 17.7 area around here. If that happens, of course, I think that will become the next target, 18.6. Now let's go and see the daily. Very quickly, the optimistic scenario is basically taking this as a 1-2 or AB. That will be taken as 1-2, unlikely as an AB, but technically it's always there, yeah? But I would treat this as 1-2, and everything hinges on silver actually making it, meaning reversing and running back above this level. So then you're dealing with absolutely explosive stuff here. That'll be an AB, 1-2, 1-2, 1-2, boom. It's going to run above 18.6, and the next target is right here and way beyond that. Now suppose that fails, and suppose silver is actually going down. It's going to knock the floor here, but it's not going to fall. We're not going to have a waterfall collapse, meaning we're not going to go there, but silver is going to go down, knock the bottom here, and somehow stop around here. Then the old scenario that we have been discussing for quite some time, that's an A, that's a B, that's a C, with this turning into an A, B, C. Do you see? That will come back, will resurface, as it were. Okay, that will resurface. That will give us an A, B, C, D, E. And if that is correct, that will terminate a B. That will pave the way eventually for a surge in silver back above the A level. But that will be a C. Yeah, it could last for quite a few months. Yeah, even maybe 8 months, even 1 year. Would be very powerful. Will run above 21. And that is the alternative, the big, if you like, alternative, provided silver doesn't break this floor. If silver does break this floor badly, yeah, then I think that the entire outlook for silver and for gold would turn quite negative, because I think a solid break of this level will almost certainly guarantee a break of this level. Okay, and the continuation of the bear trend, the big bear trend that we have seen for the last, with the exception of this, yeah, for the last several years. If I jump here to the monthly, it should be abundantly clear to you what I'm talking about. I'm talking about this. You see? So breaking the low here on the monthly would send silver under the floor, potentially quite a lot lower. Something that will not go away so quickly. But I don't think right now we should worry too much about it. As long as silver is still holding, I think the prospects are still there for it to recover and have a nice run. Now here's GDX. That is the most optimistic scenario. I have basically presented this scenario in gold and silver, but here we don't have a lot of alternatives, so it may look clearer to you in terms of the pattern, the presentation. Here's the daily that is giving us 1, 2, 1, 2, and then run up 1, 2, 3, 4, 5. That's your 1. Likely second wave here, and then expect a sharp reversal. Of course, if that plays out exactly as I'm showing you, it's going to be very, very bullish. Yeah, here are all the labelings with various, right here, 1, 2, 3, 4, 5. That's your A, that's your B. 1, 2, 3, 4, just a touch down, perhaps towards 21.80 or so. It should not go down under 21. That's going to kill the whole thing. Okay, if you are following GDX, pay attention. 21 is a critical level. I mean, right here, that's slightly under 21. It's here 2089. If I want to give you a precise number, 2089, shouldn't really reach that. So slight weakness, yes, this is acceptable. Let's say the 2180 or so, and then we want to see quickly a recovery back about 2380. That will be excellent signal. We are most likely in a third wave, and that would lead to much higher prices in the days and weeks to come.